We get the sense that central banks are bringing out this calm in markets right now. But if you take a look at how the situation is, we see oil decoupling from stocks. We're seeing stocks and bond yields not in tandem. What's going on?
Well, that's a really big question, isn't it? But I think it is the same old, which is low interest rates. And probably the new thing since Brexit is the prospect of fiscal stimulus from the developed world, and that's been absent from the conversation since the global financial crisis. But we're getting signs of it now coming out of Japan and England and increasingly even in the America itself. So I think what's holding up the markets is liquidity and generally, docile, but there is some global growth.
Yeah, VIX traders I thought was interesting. They're actually, when it comes to this volatility, they're actually shorting it despite it already being at a 2-year low out in the U.S. How does that fare in terms of Asia? Does this suggest that we could continue this rally?
Well, it's a good question because Asia sometimes goes down more when the Western world goes down, or it goes up more when the Western world goes up. In other words, it tends to be an exaggerated play or a warrant, if you will, on the global markets. And other times it decouples. And I would think that right now we're actually a little more where money is trying to find new places to go, and it is coming to emerging markets, of which we have many in Asia. And some of our emerging markets in Asia actually have quite good stories of their own, like Indonesia and India. So I think it's actually a good environment for Asian stocks on the whole.
Yeah, I thought, everyone's been talking about Southeast Asian stocks. Let's talk about closer where you are in Singapore. We just had a story out on the Bloomberg talking about Singaporean bank stocks. I mean, is this sort of a bad news means good news for the markets? Because they are very cheap, but we also have this Swiber incident that really has been weighing on the sector so far. So is it a buy opportunity?
Well, I don't think you're going to go very wrong in the Singapore banks, but I don't think they're the best place to invest. They have decent dividends. They're well-run companies. I think it's true that there is an overhang in the energy sector here that really is still weighing on the sector because they simply haven't done the kind of restructuring that has taken place in the energy sector in the U.S. So, decent dividends, well-run companies, but still will be afflicted by the energy sector until there are whatever you want to call it, restructurings going on.
Sure. It just seems just like day by day we get very different types of moods in the markets. Yesterday was very much risk on. Today we're seeing risk off. Dollar yen holding steady after seeing that big rise in fall in dollar, I should say, against the yen. So when it comes to the yen, I think your forecast was 106 by year end. We're still about 5 yen away from that. Is this kind of risk off sentiment going to continue, or is something that the BOJ is going to bring forward in September going to change?
Well, what I said earlier was that I think we're getting whiffs of fiscal stimulus in the developed world, and I think the Japanese will be the first, but it won't happen until the Diet comes back from recess, and that means September, and then really to get anything done, probably October. So this is a story which is still a few months away, but I believe it will happen because the BOJ itself has inferred that they're not averse to helicopter money if it's done in conjunction with the government. And it's very clear that they need to get the yen lower. At 101, there's negative profit growth from the top 200 Nikkei companies. So I think it's coming, but I think we will have to wait at least until October. And what it does between now and then, well, I just say, I personally think if it gets to 100, the BOJ would intervene quite heavily. That's just because it's a very round number. So I can't believe it really should go down much, strengthen much more.